We've seen the price of gold continue its slide this year. Early March trading down below 1,700, the worst levels since June of last year, a long way away from those all-time highs we saw in August. But what does this mean for gold mining stocks? Clearly they're under pressure as well. Is this actually a buying opportunity? Thought we'd take a look at some of the individual gold miners. I think we last looked at them just before the US election last year. So it's been a good few months. Clearly, what's happening with the price of gold affects the gold mining stocks. We've seen the price go from $2,075 an ounce August last year to trade currently at $1,730. So down about 15%. I suppose, off those all-time highs. Maybe gold is thinking about forming a base down here. These are the sort of 1660 area was important on the way up in April of last year. So I think we've got some interesting times ahead for the price of gold. So in this, I'll talk about 4 different ways of getting exposure to gold miners, whether through the stock itself or through an exchange-traded fund. And we'll jump backwards and forwards onto the platform to see what these look like. Hello, I'm David Jones from Capital.com, and I thought we'd take a look at gold miners this time around, gold mining stocks. It's been a while since we looked at them. We've seen the price of gold has had this steady decline for quite a few months now, so I thought let's see if there are any opportunities in there. So we'll look at 4 different gold miners, plus including an ETF as well, an exchange-traded fund. We'll talk a bit about what's been happening with them, then we'll jump back onto the charts, onto the platform, and see if there's an opportunity there. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel, and it means we can continue to push out lots of different content. Plus, of course, don't forget, we do these live streams on a Friday at 2:30 in the afternoon UK time. If you're subscribed with the alarm bell pushed, you get a notification off YouTube about 30 minutes before we're about to go live. Right, let's get into the first of these gold miners. So the first one we're going to look at is Newmont, so listed on the New York Stock Exchange, one of the largest gold companies in the world. It's got a market cap of around $48 billion at the time of recording, which makes it the 146th biggest company by market cap in the US's S&P 500 index, so major blue chip gold miner. Although it is known for its gold mining stock, it's also active in other metals, including the likes of copper, zinc, and lead, so it has a bit of a spread of diversity. The latest quarterly earnings from Newmont look pretty good. They came in at $1 a share. That's up from 66 cents a share the same quarter in the previous year. So overall positive, but I think not really reflected in the market reaction because the price of gold still remains weak. And we can see this in the shares. They had a bit of a run in early March, but year to date, the shares of Newmont are pretty much no change either way. Let's take a look at the chart and see if there's an opportunity. So here's Newmont gold. I thought it was quite interesting that actually, although it has of course slid since the August highs, we're only off probably in percentage terms the same as the price of gold, whereas some of the other gold miner stocks have been really hard hit. So the price has slid from 72, currently trading around 60, so $12, so just over 15% or so, I suppose we've seen the share price. Arguably, that trend is still down. If we picked up on the trend, our correction looks something like that, succession of lower highs, lower lows. What's interesting though, which again ties up with the lows in gold, these lows for Newmont on the way up, around $52 a share. And we did see it push back to 54 late February and rally. I think clearly if we see gold start to stabilize, Newmont starts to look a lot more interesting down at these levels. So in the short term, while we're still seeing gold under some pressure, don't be surprised to see gold, Newmont, slip a little bit lower from here. But for me, I think 52 to 54 looks to be really good support. And I think this is one well worth keeping an eye on if we see it come under a bit more pressure from these levels. The next one we're going to look at, we have looked at it before, it's the Eck Vectors Gold Miners ETF, the exchange traded fund. ETFs are very popular. It's a way of gaining exposure to an area of the market, whether it's gold miners, the price of silver, crude oil, tech stocks. So it's in effect, you're buying an index. And this is exactly what the Eck Vectors ETF does. It's tracking the performance of gold miners. So it's a way of getting exposure to that sector without buying individual companies. The Eck Vectors ETF aims to replicate both the performance, up or down, and any dividends from the New York Stock Exchange Gold Miners Sector Index. So ETFs appeal because it's a way of getting exposure. You're spreading the risk. You're not putting all of your money into just one share that may do very well or may do quite badly. You're effectively, when you're buying an ETF, you're buying a basket of stocks. So you're missing out on perhaps that one stellar performer, but you are spreading your risk and getting exposure to the sector as a whole. We saw strong inflows last year into the likes of the Van Ector Gold Miners ETF. Last summer, as we saw the price of gold surging out to fresh all-time highs in August, lots of interest in these instruments. Perhaps that's not the case at the moment because we've seen such a poor performance. But let's take a look at this ETF in a bit more detail and see if there's an opportunity there. So we've looked at the Eck Vectors Gold Miners ETF a few times, I think, over the last 12 months. I think it's a really interesting market, but again, fairly clear what the trend is at the moment. Share price peaked at almost, $46 back in August last year, the price of gold hitting fresh all-time highs. Since then, it's dropped about, $14 to where we are now. So it's off, pretty much 30%, not far off 30%. Off those highs, as with some of these other gold miners. Lots of support coming in from the May-June levels. We did look very briefly below that in early March. Still looks weak. I think the Newmont chart looks perhaps a bit more encouraging than this one. For now, still looks weak. I think plenty of time if we did see gold start to turn around to pay a bit more attention to this one. It'll be interesting to see if those $30 lows from early March continues to be a floor. But for me, as a trend follower at the moment, I'd rather be looking to sell rallies rather than buying dips. Of course, all of this will change if gold manages to build a base down at the current levels. But for now, happy to sit on the sidelines and see how things turn out over the next few months. So the next one we're going to look at is Franco Nevada. Technically not a gold mining company, but they're a gold streaming and royalty company. And I think we have touched on this before when we looked at silver miners. So Franco Nevada doesn't actually own any gold mines. Rather, they are an investor in various gold mining operations around the world. So what companies like Franco Nevada do, they provide various gold miners with capital, the money they need to explore and exploit the opportunities. In return for that, Franco Nevada gets to buy the metal, gold, at a pre-agreed purchase price. So a certain amount at a certain price. That's their end of the deal here. So clearly very sensitive to what's been going on with the gold price and whether or not they've struck a good deal. Latest earnings were strong, came in at 85 cents. That's up 44% from the same quarter in the previous year. Again, of course, because the gold price has been drifting, we're expecting to see the same in their share price. But could this be an opportunity? Let's take a look. So here's the chart of Franco Nevada. And look at these highs in August of last year. So up around $165 a share. Currently trading at $122, but had traded as low as 105. So a fairly sizable decline at some points. We're seeing, I think, quite a bit of strength in March because of those earnings, up 44% compared to the year before. It has faded a bit over the last couple of weeks or so. I think clearly this is fairly similar to the others. This correction from the August highs is still going. I think, again, if we can see gold build a base down here, it looks a bit interesting. But the fact that, even the latest rally, that was a big old move compared to what we've seen recently in the stock, rallying about $15, so 10-15% off those lows, but hasn't managed to take out the mid-Feb high. So it's another one that's interesting to watch, but it's another one that the trend is still down. So for me, if I was going to be a buyer, I don't want to wait for this one to run out of weakness. You know, we're still in this downtrend from August, so it's a 7-month downtrend now. Quite happy to keep an eye on it, but for now, nothing doing, I think, until we see this trend broken. The final one we're going to look at is Kirkland Lake Gold. So this is a gold miner with operations in both Canada and Australia. Last time around we looked at this, it was underperforming other shares in the market, and I think that has actually continued. And this is despite their latest earnings of 85 cents a share, beating market expectations, I think by about 20%. So strong earnings, but again, not really reflected in the share price. So if we look at it since last August, when the price of gold peaked at $2,075 an ounce, if you'd invested in Kirkland Lake Gold back then, you're currently sitting on pretty much a 40% loss. So is it about to turn around? Let's take a look at the charts and see where the opportunity might be for this one. With Kirkland Lake Gold, you can see the underperformance. August last year, I mean, clearly loads of them have been sliding because the price of gold has been losing ground. But last year, almost $58. This year, traded as low as 32. So down 40% off those August highs, outperforming the falling gold and outperforming plenty of the others that we've looked at here. It still looks weak, doesn't it? Kirkland can't really stage any meaningful rallies. A bit of short-term support at 32, but perhaps still looking a bit vulnerable down here. It was sort of underperforming on the way up as well. So it's, I suppose, an interesting one to watch. I think it is the least appealing out of the four that we're looking at here today. I think the risk is that perhaps, if we see a break below 32, more selling, more pressure, it will be interesting to come back to it if the price of gold turns around and stages a recovery. But there are probably still, more attractive miners out there at the moment, given its somewhat lackluster performance over the last 12 months or so. That's it for the update on gold miners. I hope you found it interesting. As usual, we'll come back in a few months' time, do another update and see how they're performing. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.